Rohr here with an early global view on Tuesday, September 30th, 2014, the last day of the month, and so there's a lot of macroeconomic data influence. So now we need to ask, what is the impact on the markets? Well, for right now, all of that has come down to being a positive, as we are up 6 at about 1975 on the S&P 500 future pre-market trading here shortly after 7 a.m. U.S. Central Time. And what's interesting about that is that on the rally on Friday, the market never quite got back to the failed initial up break and gap lower right up in that 1980 to 82 area that we now would extend up around 83 to 86 or so as congestion, failed up break, and the beginning of gap resistance. The higher resistance is back up around 88 to 90, which we saw the rally Wednesday before Dallas Fed President Richard Fisher's comments really knocked the markets on Thursday morning very hard, his somewhat more hawkish view. But as we've noted, that has been countered by more than a few comments from other Fed members now that were quite a bit more dovish. Hawks, Fisher and Plosser are going to be retiring early next year, and one wonders if they aren't just trying to get in the last of their shots, warning that the Fed might be behind the curve. Then we also have support, as we noted, starting around the old 1955 to 50 area, which we got near yesterday, never quite got there, but with a tolerance to the 1945 area, which we will highlight further on the intermediate term charts on the weekly and the daily. And not much to say about the indicators after the couple of day churn here. You know, Friday back up off Thursday's hit, then gap lower yesterday churning sideways. Indicators are pretty flat. And so that pretty much does it for the short-term view of the S&P 500.